By the end of this video, you'll have a clear understanding of Bitcoin, the total market cap, and alt's next potential breakout, and how you can position yourself to profit. This is not financial advice, and this is for entertainment purposes only. I had the same blink chart that we did from last video, a nice little structure going ahead. So 1, 2, 3, the market loves to work in threes, 0.1, 0.2. Their trend line would put us around 1.667. 1.667 aligns with right here. Let's put a line straight across. All right, clear level of resistance and support, right? But since we know that the market loves to push, we really wouldn't want to be looking there for this week. Along with their 1, 2, market was holding, and we finally broke. The total market cap never actually rejected. What we would be looking for is, in terms of pushing up for this week, at least it's a 2.1 area. And then if we go and push this up a higher, because it's also possible to retest right here, take out this high, because there's definitely a lot of shorts right above here, because you really don't want to decide off rip where the market would be going, because we've just been in a range for the past 6 months going on 7 months. Right here we have up to 2.31. that's why we have this zone from last week, clear area of resistance, and multiple times where we've topped, swung back down, hit the resistance, blasted. A lot of chop in this area, so it's a key area. So now let me show you what this week led us to do. Of course, as we know, in the monthly from last week, we finally got a break in structure in terms of closures. All the closures, yes, we broke multiple times wicks, but we kept getting closures above this point, and we finally came down and broke it. Since we broke it, this is confirmation now officially on a higher time frame, on the monthly time frame, that now the market is changing structure. And along with that, we regained telltale signs. We made a high, a low, a higher low, a lower low, a higher low, a lower low, and a higher low again. And potentially we should be coming out and striking this out now. So let's back all this back up. All right, so for this week, what happened? Total market cap technically made a double bottom with a head and shoulders wick wise, so 1, 2, 3. So this is showing a bullish sign for most people. That's what most people would be seeing. So most people on their charts would be having 1, 2, 3. If they see it, they'll put a line straight through. We're holding. This is a clear level of support for the mass majority of people. Mass majority of people always lose. So based off of what they're looking for, we want to do the opposite. So what I mean by that is, let's just delete the drawings. So let's draw the fib of what most people would do. We just missed out on the 78.6, and it shows us how we could get to the 2.39 area, and that is okay. Even if we did push up a little further, we have trend lines for that. So forth. 1, 2, broke, push this up. As you can see, push up. Even if we push a little further, it's still fine, because 1, 2, 3, ABC. Even on the higher time frame, 1, 2, 3, here it is, 78.6. So yeah, technically speaking, we could draw on the charts, and I will draw on the charts just for representation, but this really doesn't not need to be, since this whole structure has changed. So technically speaking, yes, we could come up to here, take out this high, wipe out a lot of shorters, bringing a lot more liquidity, and then that could definitely bring us down for the next few legs lower, in which that we were looking for. Hold on, where would this take us? 2.7. This is key area where we want right now in terms of short-term bounces. The reason why we're not looking, in a sense, in this area anymore is because, sorry, the charts look really messy. Let's clean this up. The reason why we're not looking in that area anymore and more towards this area and this area is because the fact that this wick has not been taken out. This wick was created. The breakout needs to get filled right here. It's a lot of liquidity right there. And along the fact that this is a clear level of resistance that everyone's going to be crying at when we make the leg down, saying this is going to be holding as support. So that fact that everyone's going to be looking here, if we even just do a little bit further, even down to this area, this would be like it would be like capulation in a sense, where a lot of people be in straight fear saying we're going to 20, 10,000, blah, 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 market's over. So at that point, when we reach here, we can get a short-term relief bounce. And if we just say we get into the third trend line this week, potentially, AB back up to 2 trillion, psychological number. We broke 2 trillion, market's black, or blah blah blah. Then we still come back down to here, and psychological 1 trillion. So either way, it doesn't really matter how the market potentially moves in a sense. We're still going to get confirmation that we're going lower, basically. So now with this potential trend line, the 1, 2, 3, this is really the last bullish trend line for the total market cap. And the fact that we didn't hit this, but on Bitcoin, let me show you right now. On Bitcoin, we did strike it. So Bitcoin's moving a little further ahead, and the total market cap is showing signs of how the market could come back up to drive back in potential greed. And we also see that with the likes of Velo in a sense. It's pushing up, playing catch up, because if Bitcoin drops right now to 34,000, the alts are so goddamn low. Like for example, Sand, right? Say for sakes that this actually did bottom, which is probably gonna go a little lower. We have a fib right here showing 9 cents is possible, very plausible. And I do believe that it should come and at least wipe out this low right here. This is outstanding. This is outstanding. It's the same little range. But really and truly, if we get down to about, what is this, 5 cents, 9 to 5 cents, excellent buy for Sand. And the fact that it's really low is where you want to buy, because let me show you, it's really the best time in a sense. If we get down to, just say the minus 27, back up to this first trend line, just 2400%, that's a 24x. Back up to here, so 33x, 3000%. Back up to the 78 points, I mean the 61.8, that's 52x. And that's us not even looking for all-time highs. All-time highs really are not necessary when you're buying this low. This is 6600%. So basically, you want to be buying peak lows. So to do this, we have to map it out on the charts. This is a 1, 2, 3. This week, oh, I had this for the weekly. That's why this is off. There we go. And then you always want to mark out 0. Let me just mark out 0 for you. Okay. Because of course we can't pass 0, but we really can. So around 0.42, if we want to not cheat this week, 11 cents. But I like to have my trend lines where they are. Right through the body. Boom. Rejection. So we'll leave it on until it passes 0. Alright, so back to what we were saying. With that, it shows how the total market cap can come back up and push, potentially hit this. This is the first targeted area, this psychological, literally 2 trillion. If we tap that area, of course, maybe a little push up to right here. Yeah, right here, 2.01, we could get a reversal. Same thing, Bitcoin's doing the push that I was expecting at my 2 zones. This first area didn't work out. We blasted through, currently pushing up. Technically speaking, we have to wait till the closure to know, but this is the second area of resistance where we could potentially just fall down and collapse from. But these are really short-term little areas where it's resistance that could make another leg down. The fact that 1, weekly closure, officially below. 2, weekly closure, holding. Everyone has their stop losses right here and right here. So this area is going to get targeted. Even if we bounce up to the 2 or 2.1, this needs to get filled and this needs to get filled, because there's going to be a lot of greed. And either way, that would still be a higher low. Even if we did come all the way up to here, it does not change anything. Or if we came all the way up to here, it does not change anything, because overall it's still a higher low. If you understand. And then either way, it still brings us over here, and over here. 1, 2, 3. Where does this take us? 1.48. So this is a good targeted area where I believe the market will potentially go. Of course, factoring the spike. So remember, third trend line always over rejects. This is outstanding. This still would fill. We have a minus 227. So let me bring back on these fibs. So from the most recent high, not really the most recent high, from A, B, C, right? A, B, C, D, D. Okay? Right? Yes. So we have 1. Okay. Let me draw this one. The original. A, B, C. D for filled. Still outstanding. right here. So let's just see how many correlations we could get. That's 1, 2, 3. I have this one. A, B, C. Fulfilled. Short term. Longer term right here. Our short term bounce. And then look. These are getting kind of complicated, but right here. So there's a lot of action over here. And the reason why we're focusing so much on right here specifically, in here specifically, is because these bullish trend lines, you know, like seeing those, these trend lines going upwards is what everyone's going to be basing the entire market off of. And when they break, that would be the maximum fear, pretty much. That's maximum fear. When we break those, that's when we should position ourselves, but wait until the total market cap aligns with wherever Bitcoin goes. That still needs to get rejected. Let's flip this upside down. Do we see anything else? This area, more specifically. This week, very cautious. It's possible. Don't say anything's impossible. Very possible. And that would also strike our outer. Technically, no, this is our inner bullish trend line. It would strike it and it would manipulate through and potentially cause a bounce. And that bounce would potentially most swing high, A, B to this, that trend line. So then 1, 2, 3, this would break, come back up, push this up to the inner right here. But this trend line is so fucking such a manipulation. But just because this, the fact that price came down and left a wick of this magnitude, it shows and it tells us where the market is potentially heading. Because that means that a group of people or the algorithm in a sense, pushed price all the way back down, drove in fear, made quick profits, brought it back up, sold again up here, and now they're gonna target it again. So they've created a false sense of support over here, in a sense, along with people having lots of longs. These people are just gonna keep getting reeled in and just penetrated. So let's delete these, keep the charts nice and simple. Bitcoin on the other hand broke the structure. Right? Wicks held, same thing. Driving in longs now. Reject right here, 60,000. For a second rejection, push this back up. 63,000 is what I'm looking at. Let me get rid of this trend line now. Do a nice little A, B, C, D. A, B, C. Holding now. 44, 36,000. 36,000 seems like a key area for us. Of course, this right here, the only reason why we have this mapped out is just because it would be a short-term bounce potentially. Let's bring this down to the new fib. A, B, C still matches our 78.6, still matches where that trend line would reject, and it still brings us down to 36,000. Look at the bullish way. A, B, C hit 78.6, so we could come up to 69,000, but that doesn't matter because look, A, B, C, A, B, C right here. Factor in a spike, which is normal, still leads us down to 35,000. So either way, it doesn't really matter where the market wants to go up. This is just insane chop now, ever since the ETFs were released, that there's really no point of going down to the dailies and such. There's really no point of using leverage and such because the market's really unreadable, other than on the higher time frames where it's actually giving you real signs of where the market's heading. And no one's even looking at this region. No one's looking at this region. And if this region doesn't hold, we have the minus 78.6 on the bullish way, which is showing how we should be going to at least 28,000. And then along with that, let me go to a monthly time frame. Let's clean this up. On a monthly, where does this take us? 23,000. 23,000 this month. But do you think we're really gonna go to 23,000 this month? Probably not. So over the next few months, it's gonna keep getting higher. But as it keeps getting higher, it's just gonna grow more liquidity and just brings in higher chances of us actually coming down to those targeted areas. Even from the actual high to bottom, as you can see, 78.6 aligns with that minus 27 at 69,000. So either way, it still matches up. And where's this target? 34,000, 18,000 as a spike, which is fair enough. And that would also fill the breakout potentially. So either way, my game plan is to buy these alts when they come down, whenever Bitcoin finally makes its move lower, because if they don't play catch up now, they're just going to be so fucking low, and that's when an alt season could potentially spark off. And the fact that we still have these CME gaps, people are saying they're probably not going to get filled, but over time they always come back through and they always get filled. So 34,000, 29, 20,000 are key targets for now and for the next couple months, but things are really starting to speed up, I'd say, in terms of the movements. We're getting more confirmations week by week that the structure is completely broken now, and we just need the retail to really just grab onto this illusion that we're going to keep going higher, and that would just be the biggest opportunity for us to really make some serious money. If you didn't watch last week's weekly outlook, that's the full breakdown of over 2 hours of content in only 13 minutes just for you, so go check that out right now.